Hi everyone, so welcome to Investing for Value. So today I want to talk about stocks worth buying in March, especially after the recent dip that we've had. It's kind of created a lot of opportunities, though I want to choose stocks that if they continue to drop, I want you to also consider that these are stocks that you would buy more of because they've proven that they can produce solid results and also have a very good future ahead of them. So let's look at the first one. First one is Facebook. You're really going to be familiar with Facebook. This is a company that's been plagued by privacy issues for a very long time. They've managed to fix them up, and well, we're just going through a very turbulent time, and it has been sold down recently. And it's selling at $191. So this has a good, future ahead of it. And even this year, like you expect a lot of the costs that were associated with tidying up those privacy issues, especially in the legal sector, and also just a lot of fines that they had to pay. Now that those are cleared up, this company has a big, its balance sheet, its income statements, they're going to look really nice going forward. They're going to show that once they start reporting. Um, so I think at the current pricing, 191, it's a good buying opportunity. Even if it was to at 200, I would still say it's a good buying opportunity. But now that you've got an opportunity to buy at a lower price, it's definitely really is a stock you want to buy. And if it even goes lower, then just buy more. So that's the thing, especially in the current market where things might be dropping even more. I want you to consider that, hey, Facebook is one of those platforms that is growing really well, and it continues to grow really well, has a really bright future ahead of it. There's not really many platforms out there that's going to take Facebook and the other products it owns, like Instagram's doing extremely well, WhatsApp's also doing extremely well. So you can kind of see this company is here for the future. It's only going to continue to grow more valuable. So then, first one is Facebook. So what's the second one? Second one is Bed Bath and Beyond. So some of you might be a bit critical about this one. It's fine, you can be a bit critical because this one has wiped off so much value in the past like several years. It's not even funny how much it's dropped. Like you're talking about in, you know, a few years ago, this stock used to be like closer to like 10 billion than it is to 1 billion. But now that it's trading at a $1.2 billion and it's less than $10, I did a video on this. I actually probably did a video on every stock I'm mentioning in the next setup, so you can kind of like look those videos up. And if you've seen those videos, you probably know what stocks I might be talking about. So, okay, so in terms of like Bed Bath and Beyond, for a while they were trading around above $16, and now they're trading less than $10. And I think it's an opportunity, particularly now that, particularly since this company has about like 900 million in cash. So it's able to like fund itself through this tough period and through this transition. And it has the prior CEO of Target. So Target has been running really well, and that was thanks to the current CEO, which has joined Bed Bath and Beyond. And he hasn't wasted time. He's done his planning. And recently they've just fired 500 staff, which isn't good for the staff, but it's kind of one of those things that are needed. And it's showing that they're starting to turn this company around. You start making the tough decisions, then you'll start seeing the good results later on. And this company is also paying a really good dividend. Like you look here, 6.58 yield in dividends. Like they might cut the dividends, who knows? But at the current rate, dividends is really good. So if you're a dividend hound, then you're like, oh, I need the stock because the dividend's really good. And it's also one of those turnaround companies. If it turns around really well, the upside is actually really good. But you want to, but like some people might not be comfortable going into this company, and it's very fair. But it's definitely a company that I'm looking at it. I'm very interested in this type of company. And as you watch all the turnaround moves, they're showing, they have a very, good, they can turn around and they can be worth a lot more because the goodwill behind this company, like if you ask anyone and they probably know this company. So as long as they build themselves with a good efficiency in terms of managing inventory, which they're aiming to, they're cutting costs, which was a 500 people layoff. Well, that's one way to cut costs. And you just have to see if they're doing anything else. But I think that's already a really good start, and that might push them towards a very close break even this year. I don't think they'll be very profitable this year, but if they can just break even this year, it kind of gives them a good leg up for next year. And just breaking even, it's going to just prop up this stock. And 1.2 billion for this type of company, I think it's not bad. Especially when you consider that they're holding 900 million cash. Like, it's true they have a lot of debt, but the debt isn't due too soon. So it presents itself as an opportunity, particularly now that the price has dropped in quite a bit. It kind of gives you a margin of safety. And I kind of see that as a good bonus. You want to buy at a margin of safety. So next one is Tesla. So Tesla, you know it very well. You also know it's been rising like crazy. So, like 750, is it cheap or is it expensive? It's probably in a sense of fair value. Are you going to get this company at a cheaper price? Actually, you could have a week ago when it was like 650. If like, I mean, you could have brought it at that price. But even if you didn't buy that price, 750 is not that bad as long as it's like not 900. Please never buy at 900 unless they perform some really good results. This is a company that's very volatile at the moment, and 750 represents some fair value that if you buy and you're willing to hold for a long run, it can potentially rise very quick if things start to look good. Though there is some like short-term headwinds, though that this is a company that is constantly building regardless. It's got its factory in Shanghai that's finished being built, and they're about to break ground in Germany. So that won't be too far off. And then once they get that factory up, and then they're planning more expansions as they go. Especially they're considering, a place possibly in Texas, and then they're also considering a place in South America. So this isn't a company that's slowing down. And they've also got the cash to burn. They've just recently fresh off raising $2 billion. So this is a company that's going to be growing very quick regardless of the situation. Like, sales might be hit for this quarter, and it might represent an opportunity. So you might well want to hold a bit of cash on the side to buy when the quarter doesn't look as good. But if you're in the long term, regardless, this is a company that's definitely going to be worth a lot more than the 750 right now that it's coming for. And it's one of those like really premium type companies. Like, if you look at Amazon a while back and you thought it sold at a huge premium, well, you just have to look at how well they performed and how well they're justifying why you sometimes might pay a premium for a certain company. Alright, so next one's up is Innovative Industrial Properties. So this is a company that is amazing when it comes to the rental. Like, if you can get a rental return of 13.3% on an average lease of 15 years, I don't know, like, I don't know where you can find that return, but these guys have managed to do that. They go to cannabis companies, they offer to buy their facilities and then lease it back to them, and they do some add-ons, of course. That's still 13.3% return. That's an amazing return. And you're tied to leases, so regardless of what happens this year, this is kind of one of those companies that is going to do very well regardless, because they still receive the rental income. And there's a legal obligation. It isn't like those tenants can just walk away. And I've also got 350 million to expand their portfolio. So the current portfolio is like more than justifying their current value, and they only spent 600 million. So if they spend another 350 million, you can see a lot of good upside. Even if they don't right now, they're still very good because they're paying a 4% dividend. But what I like about this stock is they're paying a decent dividend and there's a really good upside. Of course, like, this stock not too long ago was trading at below $80, um, and you could have brought it at like a really good price. But even at this price is fair value. So, like, this is a stock, if it goes down in price, then it's really worth buying, and that's why I'm recommending this one. Like, right now, it's kind of like it fell in the recent weeks, and it was a really good opportunity to buy. And then after things just cleared up, it rose back to its fair value basis of around $100. but I can kind of see how things are just going to keep going for this company. And if the price goes down, do not fear. It is a company just really worth buying because of its growth and because it's of its dividend return. If you're not comfortable about what it does, then hey, that's fine. But in terms of property, like this really stands out as a really good property play. And Smile Direct is the last company I want to talk about. So this is a company that hasn't brought a lot of smiles in the recent month, particularly for shareholders. But you could also think about this as a company that is giving you the opportunity to buy at a really low pricing. So this company used to trade probably closer to like 10 billion than it is to this current 3 billion, which kind of makes you really consider like, wow, the price has really dropped. So you want to you want to say like, is this an opportunity or am I buying into something that's, potentially going to go down? Well, I don't think it's going to go down by that much. Like it went down to like $7, and it was a really good opportunity to buy. But even at $8, it's still a really good opportunity to buy because this stock this year is projected to pass $1 billion in revenue. So $1 billion in revenue growing at 40%. That's no small feat, and you're only paying 3 times revenue. To find companies like that, it's going to be really difficult, and they're going to be hitting their break-even point. Like I don't know if they can be like that profitable this year, but they're definitely going to be hitting their break-even point, which will be really good. And at 3 billion, 40% growth. What else do you want? I'll hands down say this is one company that you definitely want to get into, assuming you're not too worried about the current. Like there was an investigation done by NBC. They did a little like video on it, and it had a bit of negativity, but it seemed like this is not really an issue now. Some people tried to do a suit, a class action suit against these guys, and they went to court. Court just dismissed it, so it kind of reaffirms the position of the company that what they've been doing is right. They have about 750,000 happy customers, so that's also reaffirming it. And it's like one of those situations. You just have to take a bit of risk to get a bit of to get a really to really get potentially a really good reward. So if you own the stock, continue holding, and see it as an opportunity to buy a bit more. If you don't own the stock, well, and you're not too worried about the risk, you're potentially paying a really good rate for a very good growth company that's also disrupting the dental industry. So and they've also got a pretty good balance sheet in terms of like the cash on hand that's going to last them a good while. So that's the company these are all 5 companies that I'd be very happy buying into, and it's a bit of each. So regardless of what type of investor you are, you potentially would be happy with at least one of these. So those are my stocks worth buying in March. Let me know what your thoughts are, or if there's any other companies that you want me to look at, then certainly just comment below, and I'd certainly be happy to look at those. Until then, good luck investing, everyone.